Hi and welcome to the Market Alert for Wednesday, the 5th of January 2021. So we've got a bloodbath batters big tech sparks bid for banks. So the bond market's under pressure thanks to the tapering, and also mega cap tech stocks are puking according to yesterday as well. Well, today's Wednesday, so that's ADP. If we've got non-farm payrolls out on Friday, and they're out at 1:15, the market's going to be keeping a close eye on these. Also got building permits and FOMC tonight, so it could be a fairly quietish morning until we get to the afternoon, and then it'll go quiet until we get to the ADP numbers and FOMC at 7 p.m. So let's start off with the Dow for yesterday, and if I can find it, here we go. So we had a new all-time high yesterday. Let's just start off with the weekly chart. You can see there it is, 36,932. We're still moving to the upside, although the market came off quite sharply, which in the daily chart you can see there. We've got obviously the same number for the high. Overnight prices are starting to move lower. I'm just going to remove this for a second so you can see the automatic swing points. And I've drawn the fibs in there, and you can see where the market's currently traded down to, which is the 38%, and seems to have found a bit of support there. We'll just expand this a bit and move it over to the left, and there you can see. So we've headed down towards the 38. I've written or put in the other fibs as well down to 89, which brings you back more or less to where we were before we had the last surge to the upside at the beginning of the new year there. So that's the picture for the daily chart. This is how it all happened yesterday. We've got, this is the session, the main session for yesterday for the Dow in the 30-minute chart. And you can see in the pre-market prices moved higher. This is from 6:30 a.m. yesterday. Market doing its classic retracement and not move, and then it just absolutely exploded at the start. First day when everybody was back. We then went into, we got some divergence in the stochastics. We got selling, huge selling there in the volume as well, 2 bars there. This continued with the market moving lower. They tried to hold it at the R2 with some demand, but the market then drifted lower, and then we found support and we traded back to the upside. Now, there's a couple of things here to note in these bigger time frames. I'll just use the fib retracements. Again, to the left here, we've got from this low up to here, you'll see the market coming back to 60, this is 62%, what's known as the golden ratio in fib numbers. Just drag this over so you can see it. So the market coming back to this, we were oversold as well. We then see the buying, and we've crossed over on the stochastics. The market rallies up. Where does it rally to? We go from here down to here, and you'll see the market stop at 78%. The selling then came in this area, and the market moved lower. Now you can move into smaller time frames when you, like we do with the daily chart, we go down to smaller time frames to trade it. You can do this even with 30-minute. You can see where the action is heading to, and then you can go into a 5-minute and time the trade to actually hold it a lot longer. And I'll be doing examples of this as we go forward for the update on the software and the course, which is what I've been doing over Christmas. Added lots of videos, tutorials, been recording all day yesterday as well, with a lot of examples of this in real time to come, so you can see how to read the markets fluently and build your own trading strategy with the tools as well. But I digress there. Let's move on to the DAX, and also here we can see that the DAX at the moment's got a bit of divergence coming in the daily chart, so the momentum's dropping off even though the market's starting to move to the highs. Let's have a look by seeing why the market's struggling. So from this high down to this low, which is automatically highlighted, you can see that we're at 89% there. It was an interesting area yesterday to watch the market go through this as well, which I say I have recorded, and we'll be releasing the video shortly on this and adding it into the member section of the Omni Predictor website. So you can see that we've also got some selling pressure supply coming into the market as well. But the market's stuck at that 89% at the moment. So from this low to this high, just in case we get any movement back to the downside, these are the fibs to the downside in order, obviously. And again, it brings you back more or less to where the move started. And that's a great thing about having these lines on the chart. You don't actually need to draw the fibs on, because eventually what happens is your eyes get used to it and you'll be able to calculate, or visually see I should say, from here down to here. You know that 89 is only going to be above the line in the retracement, and you can work out obviously where 50% is. Your eyes just get used to it. It's quite amazing, really. In the 2 minute chart yesterday, one thing I've started to do as well is to move up to bigger time frames to hold the trade for a lot longer. I will use the 2 minute chart to time the trade, as it can help reduce the initial risk. But certainly holding a trade, you want to move out to bigger time frames. It's something that I did when I started off trading, and then shifted to smaller time frames, i.e. the 2 minute chart, which is fine if you want to just sit there for the first hour and try and take a few quid out of the market. Nothing wrong with that. But I'm liking the idea of knowing the full background of the market, i.e. the daily chart, and then trying to hold the trade in harmony with the bigger picture. So yesterday the market kicked off moving higher. Now I don't know why this is not green, because it should be. It traded up to the scalp, which is the criteria to actually show that there was profits in the trade, but it didn't for some unknown reason. I don't know why. But then again, I'm using an upgraded version. There may have been something adjusted in the code on that's affected this. But this one traded straight up to the scalp and the BRN, and it stopped, and then they hit it with some serious selling, and the market moved lower. Again, we had this one, which resulted in a 25-point loss holding the trade on this on the old way of trading, if you like. The market hit the entry, but I could see that we traded back to 89 double bottom, and then we started to make the move. And like I say, in the 5 minute chart that I've recorded every single bar, I can explain why it did what it did in these areas. But with the older signals, that's how the morning kicked off, and then the market just kept moving all the way through. And then in the afternoon, we had the market move lower with a 15-point trade and a 10-point trade as the market came back. So this was the 15-point trade as the market went through the scalp and then started to come back here. And then in the second one, it only came back through the scalp and the 5-bar moving average there, just to give 9 points there. So again, it was just about making up the losses. Whereas in the 5 minute yesterday, with the new approach that you're starting to see drip fed into here, this resulted in a 150-point move as the market played perfectly to the Fibonacci retracements and also the stochastics and all of the other tools that have been added into the software. In the metals, if I can find them, here we go. So we'll start off with silver. Yesterday it was allowed to move back up. It came off the 89% retracement. Didn't get too far and is being hammered already overnight. We've got the ADP numbers, so silver's going to get hammered today. I would be my guess. Yesterday you can see it was allowed to move up, and if you look at the white vertical rectangle there, you'll see this is where the LBMA come in and start the day. And when they do that, apart from we've got the holiday there, you'll see that majority of the time they will move the market down first, which has been the predominant picture for the silver market for a long time. You can see it there as well. So in gold, this holding a bit better overnight than silver, which is why once again we're seeing the gold-silver ratio actually moving back to the upside, because gold is holding steady, whereas silver is already being moved to the downside. It'll turn up there. You can see there. See how it's starting to move quite sharply, and that's the reason why. So let me just go back to Find the chart. There we go. So we've got gold holding steady there, and if you have a look at the 5 minutes of silver, you can see there it's been drifting down. It's got hammered through the BRN. That's become a resistance, and that's now moving to the downside there as well. And of course the dollar sideways to high. It's not really moving higher, but they're managing to move silver lower already, which is not unusual, is it? They'll allow it to move at some point like they did in 2020, but at the moment throughout 2021 it's been hammered to the downside. Even though the dollar has been sideways to lower as well, it's continuing to be pressured to the downside there. Expect the 89 to be tested today, and in particular if the ADP numbers come out softer, although they shouldn't, because there should be the seasonal increase in retail staff, but you just never know in these strange and weird times. Okay, that will do it for this one. If there is anything else happening in between, I need to let you know, I will do, but otherwise, as ever, thanks for watching. See you in the next one.